Is it really possible to love a stock market crash? Well, if we use history as our guide, you will see that some of the greatest bull markets came after very weak periods in the market. It's a sort of cleansing of the market. When you get these dramatic sell-offs like we've had over the past few weeks, it shakes out the sellers, it creates value in stocks that may have been overvalued, and it shifts the psychology in the market. So stock market crashes are really quite good. Now, it's short-term pain for the benefit over the longer term. We're going to look at a chart in a moment, but it's really important when you see a stock market crash to be patient for the sign that the correction is over. So let's jump into a chart of the S&P 500. And first I want you to notice that we had this period of weakness here, and out of that came a very strong period. We had 3 weeks of weakness there, a very strong period. 4 weeks of weakness, a very strong run. Now more recently, we're now sort of on our 4th week. There's no sign yet of a strong run, and that's the critical thing that we have to understand, because timing these things is everything. If I make this go back a little farther, you're going to see that at one point we had a period of weakness, but it lasted most of the year. That was in 2022 when the market was having to go through higher interest rates. Now here you see the COVID crash. At the time it felt like the sky was falling, and yet look, we had a great bull market out of that. And here we had a great bull market out of that 8 months of weakness. So how do you know when the crash is over? Well, I like to simply look at the charts for a break of the downward trend line from a rising bottom. I've done lots of videos on this, but let me explain it to you again. Now we can define a trend line by going across the tops. So all I've done is I've just picked the peaks and we broke the trend line there. It's not enough to break the trend line. We have to also do it from a rising bottom. Now that was a trend on the weekly chart. Sometimes the trend is on the daily chart. In fact, right now, the only real downtrend we have is on the daily chart. So you can see here on the Stockscores website, I can quickly flip to a daily chart, and there you see the downward trend line. It's very steep. So we could even go shorter term to a 1-month, 60-minute chart. And until this downward trend line is broken from a rising bottom, we don't want to try to catch this falling knife. Yes, I think we will see great opportunities out of this weakness. There's a lot of good quality companies that are selling off, they're on sale, and you can take advantage of them because of the market weakness. But wait for the signal. I'll tell you, make sure you're subscribed to this channel. I do these videos every week, and as you're subscribed, you're going to get my updates weekly on when this actually happens. Now, while you're subscribing to the Stockscores YouTube channel, also go to stockscores.com and make sure you're registered for my free weekly newsletter, because I'll update you there as well. I'm always doing a market update every Monday. It's free. You just click on the See More link and you can register for that as well. I've got more upcoming events, which you can learn more about how I trade the market. These are all free, so you can take a look at those as well. All right, let's get into this week's market analysis, and you'll see from this analysis that there is some cause for hope if you are an owner of stocks. Let's start with the S&P 500. We're going to take a look at the 1-month chart, and what we're looking for on this chart is a break of this downward trend line from a rising bottom. And you can see that we had some strength on Friday, which could set up for the rising bottom. And then if we break that downward trend line, we will have a short-term buy signal. What I mean by short-term buy signal is a signal that there is a bounce back in the market. That doesn't necessarily have to last more than a few days, but it's a tradable bounce typically. If you look at the 3-year weekly chart, you can see that we have really flirted with this long-term upward trend line, and you could say that we've actually broken down through it. But we did not break down through it from a falling top. This was a new high. And so if we get a little comeback rally, say this week, and then make a falling top and start to move lower again, then that would be a bearish signal. If instead we can move all the way back up to those highs, then the market has stabilized and gotten itself out of trouble. Let's take a look at the NASDAQ 100. QQQ is the symbol there. And similar to the S&P, you can see that we had some strength on Friday, but the difference here is that the downward trend line has been broken. Now, it is from a new low, not from a rising bottom. So we still need to build a rising bottom and then break to the upside. Now, we should remember that we have a Fed decision on interest rates this week, and perhaps we will see a bit more of a surprise positive announcement from the Fed on either a lowering of interest rates to deal with the concerns around tariffs, or perhaps just a little discussion around the increased likelihood that there'll be a drop in rates soon. Here's the IWM, the small cap market, and just like the NASDAQ, it's breaking its downward trend line, but not from a rising bottom. So we want to see that confirming signal break up from a rising bottom. I did a video last week about this exact topic. This is a reversal signal. I could sometimes call it a crash reversal signal. And we're looking for that on some of those leading stocks like Tesla, Nvidia, which have been beat up. Tesla more so, been really beat up over the last few weeks. Want to watch for that signal in those markets. Let's take a look at the Toronto Stock Exchange. This, of course, the Canadian market. Daily chart broke down. Let's take a look at the 1 month chart. And the 1 month chart still in the downward trend. A little bit of a rise up on Friday, but again from a new low. So all these indexes showing the same things. But what's different about the Canadian market is that it is actually holding its upward trend line still. So it's actually a little bit healthier than the US markets, and probably because of the heavy weighting of gold, which is our next chart. And you can see that gold is moving to new highs as investors look for some safety. They're buying gold, which is often the case in times of turmoil. And you can see it's a choppy upward trend, but an upward trend nonetheless. And the 3-year chart, very strong. So that's quite bullish on both time frames. Can't say the same for oil. USO is in this sharp downward move, much like the overall stock market. The concern there is that tariffs create an economic slowdown worldwide and less demand for oil. We are building a little bit of some rising bottoms. We just need to break this downward trend line. And again, if we were to draw it, it looks something, well, I'm not letting me draw, but anyway, you get the idea. Let's take a look at the currency market. UUP is the symbol for the US dollar. Downward trend, a lot of money moving out of the US because of the tariffs, and so you see the US dollar weak, but in the grand scheme of things, still in a sideways range and relatively strong versus other currencies over the long run. What about Bitcoin? Well, Bitcoin showing a little bit of trouble the last month and a half. You see a little bit of selling pressure that shows up more on the 1 month chart. It's choppy, it's volatile, that shows uncertainty. It needs to break this downward trend line from a rising bottom. The 3-year chart is still strong, however. I could draw a trend line along these bottoms and you can see that that is still intact. Now the final chart, which is really all about interest rates, TLT, it is moved up over the last 2 months, over the last week and a half, a little bit of weakness. It shows up more so on the 3-year weekly chart. It is trying to make a bottom, but it really can't get going. And that's why I think what the Fed says this coming week here on interest rates will have a big effect on the bond market and could be a stabilizing factor. I don't expect that they're necessarily going to lower rates, but they may have some comments that increase the probability that they will lower rates in the near term. So my ratings then, US large cap and NASDAQ bearish on the short term and long term neutral. US small cap bearish on both time frames. Canadian stocks bearish in the short term, long term neutral. Gold bullish on both time frames. Oil and the US dollar short term bearish, long term neutral. Bitcoin bearish in the short term and bullish in the long term. And bonds neutral on both time frames. All right, now let's get into the trade of the week, an example of a stock that was tradable using my methods. You can learn more about my methods at stockscores.com in the trader training area of the website. Let's take a look here at SUNE. It was a pretty quiet trading day on Friday, and certainly most of the week was fairly quiet. One of the things I love to do is look for stocks that are in upward trends, but I don't like to chase the trend. I'd rather buy the break of a pullback, and that's what these blue dots are all about. So usually when I do these trade of the week, we talk about the pink and yellow dots. So these are my action candles. But I also like to look for a certain kind of a pullback and then a break of the pullback. So anywhere there's a blue dot, we like to catch the first one in a new upward move. So here's an upward move, a pullback, and then a break of the pullback right there. And you can see that that led to a decent run. And then we had a bigger correction and then a new upward move with a new break of a pullback right in here. And that led to this next leg up. So it's a simple technique. Rather than be part of the crowd and have that FOMO trade, we like to buy the weakness in a strong stock by waiting for the break of a pullback. And again, you can learn more about what I do at stockscores.com. Of course, we have a 4-part series coming up very soon. It's all free, 4 1-hour lessons where I will walk you through all this stuff. So make sure you're registered for that at stockscores.com. Well, I hope you've enjoyed this week's Stockscores Market Minutes. If so, click the like button, make sure you're subscribed to the channel, make sure you're subscribed on stockscores.com for that free weekly letter, and as always, trade well.